All right, so thank you guys all for coming out. Really appreciate it. I know I see a majority of my teammates here, but thank you everyone else who came out. I see Alex, I know you're in football, Balthazar, rowing, and Xavier in track. Thank you guys for all coming out. I really appreciate it. Yeah, so today I'm really still trying to learn how to do all of this, but so just bear with me if anything happens. I'm just going to give a little slideshow, I guess, of the overview of what my vision is for this club, how you guys can all help out, support, and then we're going to get into it, learn some new stuff today. Yeah, and I hope it's going to be a lot of fun. I'm going to give a couple demonstrations of like just joining some stuff that we have and learning. Yeah, so let's see, how do I? So here we are. So everyone, welcome. Thank you all for coming. Are you guys able to see my screen? Is it just the presentation or hold on? Perfect. All right. So everyone, welcome. If anyone wants to say anything at any point, just message in the chat. Feel free to do that. I totally wanted to give a shout out at the start of this to the beach volleyball team. Good luck. I know we had a couple members that were unable to make it. So thank you guys for all your support. I hope you guys kick some ass today in your game. Nextly, I apologize in advance. As I said earlier, things are going to happen. It's my first time. We're going to get through it together. But you know what? We're going to take this club to the moon. We're going to be better than ever. I know that a lot of you guys are passionate about investing and everything and want to learn. And I hope that between myself and anyone that comes into the club, whether it's speakers or other presenters, we can all learn together. I really think that this will be beneficial for everyone. And yeah. So what is Safe Club really? Well, Safe Club, the goal of it is to, learn more about financial education. I think that there's a lack of transparency and it's not taught in schools, So basically, I want to make sure that this club is up to you guys. Whatever you want it to be, if you want it to be just about stocks, or if you want to just be about real estate, whatever it is, you want a combination, I want this to be up to you guys. If you guys want to leave me some feedback, anything is greatly appreciated. Just want to try to pull up the chat here. I want to see if I can. All right, here we are. And then I just want to make sure that we can build a culture where everyone feels like they're able to talk about investing and everything. I don't want there to be any sort of, I just want it to be a safe space, like it says here. If anyone has any problems at any point, feel free to email me, message me. Anyone who has ideas for guest speakers, feel free to throw that out at any point. Still looking for anyone to come speak, and especially in finance background, real estate, whatever you name it, and relating to investing, or someone that's in a professional background, a recruiter or something like that. I think that we can benefit all from that. Yeah, so basically it's a learning space, and it's also a space where you can talk about investing, etc. I don't want anyone to feel alienated. So if anything happens like that, just feel free to reach out to me. Most of us are college students. We're on a budget, and we don't really, and we're all student athletes, and that's what I think really bonds us all together. I know that not all of us have time to go have jobs and everything, so it's not like we have this ridiculous cash flow coming in where we're just going to be pouring it into the stock market or something like that. So we're all on a level playing field here, I think. No one's making millions of dollars a year. So we're all just trying to learn how we can better our financial future so that when the time does come, when we're all making millions and, we will be set in the right mind space and know what to do with it, So going on to the next slide, if anyone has any suggestions for the club, any ideas, anything fun that we can do, drop it in the chat, message me. I want everyone's voices heard. And I really think that we can have some fun with this club, really. So here's our mission slide. I wanted to make sure that everyone knew what the goals of this club were and everything. And I've also added, I'm going to see if oh shoot, sorry. So the mission of SAFE is student athlete financial education is driven to bridge the gap between students in the working class, meaning like professionals and whatnot, through learning skills in the stock market, real estate, and other skills through speakers' presentation to secure their best financial future. I think that one of the best ways to learn is from people that have done it before. So speakers, presenters, parents, family, if anyone comes in that has a really good financial education background, I'm willing to have them come in and speak to us, because I think it's super important to have stuff like this. Sorry, 1 second. I just want to drop the link in the chat for anyone that wants to read our Constitution. Just leaving that right there. Feel free to look at it at any time. Just trying to make sure I don't forget anything. Let's see. And again, if anyone needs any sort of, feel free to reach out to me. If anyone needs any sort of like work as far as being president of this club, I went through a training as far as like sexual assault or any sort of bullying. I don't tolerate any of that in this club. And if you ever need to reach out for me for any sort of resources or anything, feel free to. I am always here for you guys. Moving on, I know a couple of you guys just joined, so don't worry, I'm recording it in case you missed the first couple minutes. All good. Just a quick little introduction on what the club is. Going on to the next slide, this is the results from the survey that I had you guys do. Now these aren't updated. I know a couple of you guys joined pretty recently, but when I made these slides, we had 21 members. We're up to like 30-ish now, so we're growing, guys, and thank you guys all for the support. But we have a broad range of sports that are coming in here, and I think that our diversity, we can like excel. We're all coming from various backgrounds, and this will help us. And it looks like there's a broad range of people from freshmen to seniors that are in this club, and again, a broad range of majors from business to poly-econ to genetics and plant bio. I mean, we can learn something from everyone, I think. And I think that our diverse backgrounds will benefit us. Moving on, what did you guys want to see? So you guys wanted meetings from every week to 2 weeks, and that really surprised me. I really thought it was, okay, once a month type thing. I don't really want to listen to this guy lecture, but you guys seem really passionate about it. And so I really appreciate your support. Hopefully we can get a bunch of more people incorporated with the club and thrive. So most of you guys said that the weekends or late on weekend nights worked best as far as time of the meeting goes. If anyone has any other suggestions, feel free to drop them in the chat. And as far as what you guys wanted covered, there was a lot of like memes, I guess, but I appreciate the memes. As Stonks, Elon, how to out Elon. I didn't know who was trying to kick Elon out of position. And last but not least, a couple people said Doge. As you can see, my background's got a little Doge emoji. Again, if anyone wants it, just message me. Moving on, the executive board. Now, I know many of you guys are interested in being part of the executive board at SAFE. And now we have 4 open positions this semester. I wanted to make sure that we didn't alienate anyone and make sure, I don't want the club members to be a minority. I didn't want there to just be everyone in this club was a board member and they had say over it. So I wanted to start out small. There's 4 open positions, including vice president, VP of operations, VP of social media and communications. I can reach out to anyone who has any questions as far as what each of these positions entails. But more specifically, I mean, vice president will be my right-hand man, woman, and then VP of operations will really work on like day-to-day stuff, social media, obviously managing the social medias and whatnot, and then communications working as far as outreach and internal communications, working as far as taking like notes on meetings, etc. And we're going to expand the positions as the club grows. You know, if this club grows to 100 members, I'm going to need a little more help, and I'm sure that all the other board members are going to need a little more help. And so if anyone is interested, feel free right now to drop in chat, message me privately what you guys are interested in. If you guys are interested in any of these 4 positions, just feel free to message me. I will reach out to you guys on following up with details. We're gonna have interviews in the next coming weeks, and then hopefully we can get this club up and running and everyone can be a part of it. Nextly, team representatives. I know this is very common when there are student athlete clubs. So the goal of the team representatives is to get the word out there. So not only will you be representing your team, but you will also be asked to cover a couple of the other teams if you know people on those teams. So ideally, if you're applying to be one of these team representatives, you would be able to reach out to other teams, get your team incorporated and excited about it. We're going to start off with just 2 team representatives because, again, I didn't want the club to be a majority of just board members and team representatives. And I wanted to make sure that everyone felt like they had a safe space as far as making sure that it wasn't just dominated by the people that were quote unquote in power in the club, I guess. So nextly, be moving on, ideas for the club. This is where I want your input. So if you guys have any ideas for the club, drop them in the chat. I really appreciate anything. So this is what I've come up with. This is the best way that I learned how to navigate the financial education space. And again, I'm no master. That's why I'm going to be bringing in other guest speakers and people to talk to you guys today or in the future, sorry. But best way I got started learning about the stock market, the topic we're going to be covering today, was through this game called Investopedia. Now I sent everyone out a link to join our Investopedia game, and there will be a prize at the end of the semester, most likely thinking some sort of gift card. Unless anyone else has a better idea, feel free again to drop it in the chat. But there will be a prize awarded at the end of the semester, this semester being May. So, and then there'll be another one for each of the continuing semesters. And basically in this game, it's basically paper trading. So basically everyone starts out with $1 million, right? Amazing. And then we will be you can choose any sort of stocks that you want to invest in from there. And then the winner will be the one that has the most amount of money at the end of it. And you can do your own research, and we're going to get into a little bit of stocks later in the club, so don't worry about that. I also thought that, a lot of people, when they think of investing, they think of the stock market initially, which is why I wanted to cover it in the first meeting. So I was thinking that if anyone wanted to, pitch a stock to any one of our members, I'm open to it. I love hearing about new opportunities that I haven't heard about. And that's what it's about, learning. If everyone is, participating actively and going out, and we're all going to learn new things if someone comes and presents something. I also thought about having stock talk again. Stocks are very important as far as financial education goes. So the more other people can learn, I think you'll also be learning if you're going and participating in these things. And then at the end of the meeting, of every meeting, I wanted to have time for members to come talk with board members or myself about suggestions for the club. Open to anything. Again, really, I want this club to be what you guys want it to be. Slack chat will be for stocks, financial ideas, and then just general information. If you guys want to switch over to something like GroupMe or something else, totally understand. Thought Slack, I know other clubs use Slack, and it's super cool as far as separating up the chats, so we can separate it from general and then just stocks, memes, stuff like that, investing and whatnot. Anyway, if you guys would rather prefer GroupMe, speak up at any moment, put it in the chat, let me know. I sent out a link again for all of these, and I will be putting them in the chat later in the meeting, so don't worry about that at all. Nextly, stocks. We're gonna get right into it now. So I guess I want to give a little background on this clip. So this is one of my favorite movies. I bet most people here have seen it. Wolf of Wall Street. Many of you guys know this clip. But basically, in this clip, Matthew McConaughey gives a brief explanation of the stock market. Let me know if you can't hear it at all. Maybe, yes? No? How do I do this? Uh-oh. Audio. It says it's on, but I don't know if there's a way that I can get you guys to all hear it. What the? Okay. Again, really sorry about this. Again, it's the first meeting. Just trying to bear with me here. Don't know why my computer's freaking out now. All right. Basically, in this clip, Matthew McConaughey goes on to explain to Jordan Belfort that the stock market, no one knows what's going to happen. It could go up, it could go down. So that's what I'm basically getting at here. I don't know what's going to happen in the stock market. Nobody knows what's going to happen in the stock market. And that's the beauty of it. No one knows what's going to happen. So anyone could be right on any given day. No one's ideas are bad. I want to hear all of your ideas. I'm pretty sure all of our members want to hear all of your ideas. If you have any ideas as far as stocks go. Here we go again. Let's go. All right. Disclaimer. I'm not a financial advisor. I can't tell you guys what to do. I just want us to have an open learning space where we can all learn together, I guess, about stocks and bonds. And I'm sorry if I mislead you in any way. This is just what I know and what other people have taught me, what I've learned through YouTube and etc. And I hope that some of the other speakers that can come in will be able to teach you as well about it. Don't sue me. None of this is financial advice. This is what I know. This is the best knowledge that I can give you. So if anyone wants to talk about it right now, what does anyone know about stocks, if anything? Feel free to drop in the chat, speak up. I want to hear from you guys. What do we know?
The rules have been changing these past month, 2 months.
Yeah, they have. For anyone that's unfamiliar with what Matthew's saying, basically what happened recently was Robinhood and a couple of other investing platforms blocked some people from buying and selling certain stocks that were being hyped up by places like Reddit and other like Twitter, etc. And so these companies didn't allow you to buy or sell these stocks, basically, or sorry, it only allowed you to sell the stocks once they did it, basically crashing the share prices. And so the people that were shorting the stocks, hedge funds and the big guys, I guess, ended up cashing in huge and then leaving all of the quote unquote retail investors or people like you and I, college students, that are hyping it up on Reddit, broke and in the bank basically. And you opened up your Robinhood app the next day and you weren't able to buy more, you were only able to sell it, therefore only creating downward pressure on the stock, tanking the stock, etc. Reese, you said diversify your portfolio. We're going to get into that in a little bit. That's huge. And the guest speaker who I wanted to be here today, that is one of his major points that he talks about. Chris, Bitcoin, we're going to get into that in another lecture. Hopefully I can have someone come talk on someone who's better educated on the whole blockchain network than myself. I love the idea of Bitcoin and the idea of moving forward in like a digital economy. I think it's super cool. It should be challenging though in the next couple of years. But yeah, anyone else have any other thoughts? All good. Moving forward, here's some tips. So the number one rule that I've learned is time in the market is more important than timing the market. People always say, oh, like this is the biggest dip, like buy the dip, etc. Or like, oh, the stock market's way too inflated at this time, like you should wait. The number one, like, time in the market, if you invest now, it will be more valuable than timing the market, because no one knows. Again, going back to that thing with Matthew McConaughey, no one knows that the stocks can go up, down, sideways. No one knows what's going to happen. So it's better to just have time in the market than trying to time the next crash, because in trying to time the next crash, you'll likely miss out on some gains, etc. Do your own research. I'm not here to tell you guys what to buy and sell. I'm just telling you what I know to buy and like what I do, but do your own research at the end of the day. If someone tells you on the internet to go buy GameStop or Dogecoin or Bitcoin, and you don't go do any of your research, you're most likely going to go lose money at the end of the day, because you don't know the fundamentals, what you're looking for. You should always have a plan. When you buy something, when are you going to sell a stock? You should have a plan of an exit strategy, basically. I'm going to also drop this link in the chat. This is a link to one of my favorite YouTubers. He's kind of weird, but he basically goes over everything that someone who, as he calls, a noob to the stock market would need to know. He goes over everything. It's super helpful. And I learned a lot from him when I first started getting in investing. So yeah. The next one being Netflix. It's a 20-minute documentary on Netflix. I think it's called Explained the Stock Market. I watched a little bit of it and it seemed like it did a pretty good job of explaining it from my understanding. So if anyone wants to hear someone else besides myself ramble on about the stock market, Netflix. And again, and I've just dropped some YouTubers below that I personally watch. Financial Education 2 and 3. Graham Stephan, who's right here in the corner, Meet Kevin, Solving the Money Problem, and Millennial Money, which is a combination of a couple of these guys. Now I know that it just so happens that all 4 or 5 of these guys, they're all white males. So I don't necessarily think that's a broad, like a diverse background as far as like investing goes. And I think you should hear all sort of platforms and all different opinions on, like, people come at it from a different way. And I think that in hearing different perspectives, you can learn a lot. So if anyone wants me to direct them to any sort of resources that are not for white males, please reach out to me. I can give you much better resources. These are just the 4 people that I follow the most. They're the most quote unquote popular by like subscriber count on YouTube. And they know what they're talking about. But there's a lot of other people, such as Kathy Wood, who runs a fund called ARK Invest, who's super knowledgeable. My personal favorite investor, but she doesn't have a YouTube channel. That's a bummer. But yeah. So moving on. Now we have the basics. So what is the stock market really? So common stock is basically ownership in a company. When you buy one share of a stock, you are buying an ownership in that company with the hope that when they do well, most likely their stock price will increase because people will be buying it. And then if they do well, you do well, basically. So if they earn $10 annually for each of their investors, that money is subsequently coming back to you through the appreciation of stock price. And in buying common stock, which is what we're able to buy as like public retail people, you are owning a fraction of that company. And the first time that people are able to buy a company's stock is when the company IPOs, which is the initial public offering. Now, there's plenty of private investments that go into companies. You hear about these seed fundings all the time of, oh, we just completed our round 2 of funding. Those are private investors. We aren't able to purchase those because we are not multimillionaires. We're just college student athletes. So the first time we're able to buy a stock is when it IPOs. Companies sometimes have secondary offerings where they raise more capital. And in doing this, the goal for them is to raise more capital so that they can go do other ventures, as far as like raising money to go. I know Tesla, when they did another secondary round of funding, they wanted to go expand their plant and they wanted to make a new factory in China. So they did a second offering. Now that normally does tank the stock price because that means, hey, like we're short on cash or something like that. Why don't you already have the funding to do that? Sometimes it's good though. Sometimes people think, oh, if they're going and raising the secondary offering, that must mean there's a lot of growth ahead of the stock. You don't know, you have to do your research basically in these situations. And if anyone at any point wants to interject or raise their hand, feel free to. If you have a question or drop it in the chat, I'm sure that everyone would like to hear everyone's opinions. Nextly, a dividend. A dividend is when a stock commits. If you buy a stock, it will tell you in the description down below if they offer a dividend. Now, a dividend is basically a share of their profits that gets paid out to investors in the company. So for example, Apple, their dividend is like roughly 1.3% or something like that. I could be wrong, but basically every quarter or half year, whenever they commit to paying it, when they receive some of their profits, they will redistribute that to investors and you will get $1 in your account or something like that for owning one share of Apple. The stock price is like roughly $120 or something. So 1% would be like around $1.20 or something like that for every share that you own. In addition to the dividend, you also get the appreciation of the share price, which is where you make a majority of your money most of the time. However, there are stocks that are strictly high dividend yield, meaning that 5% of the company of the stock price is distributed to investors because the company has the ability to distribute that money. Again, if I'm butchering that in any way and anyone knows any better, feel free to drop it in the chat. That is just my understanding of it. Next is a PE ratio. So PE ratios are one of the most important indicators to look at when buying a company. And PE ratio is price to earnings ratio. The price of the stock divided by the amount that they earn. Now, most of the companies these days that people will hear about are companies that have negative earnings, meaning that they lose money per share each year. Those are the high growth companies normally, or the companies that are failing actually. So they actually don't have a PE ratio, but companies like, let's say Apple, they have a PE ratio of, let me just look. So Apple stock is currently trading at $121 and their PE ratio is 32. So that means that they earn roughly $3-4-ish for each of their shareholders annually. And that is their indicator of, okay, they're trading at 32 times earnings. So it would take you 32 years to recoup your investment on Apple if you were just strictly buying it just for their earnings, but also you get the added benefit of appreciation. I could be butchering that based on look on Matt's face. Next up is mutual funds. So mutual funds are just a portfolio of lots of stocks, bonds, and other investments, and it's professionally managed. So basically, in buying into this, you're not buying into one individual stock or anything. You're buying into a group of stocks, a group of bonds, and someone else is managing it all for you. Now you can buy into this, like you can put a little bit of money into it, or you could just tell like your financial manager, like when you get older and whatnot, to just put all your money into a certain mutual fund. Next, there's exchange traded funds, or ETFs as many people call them. And these track certain indexes, such as the Dow Jones or the S&P 500, which are just averages of stocks. Now you can buy ETFs that specifically track just tech companies, or you can buy ones that are just space companies, or if you're really passionate about healthcare, you can buy just healthcare strictly ETF, and it will track the general. You'll buy basically a group of stocks that are in this ETF, and it will track basically if a bunch of the stocks in healthcare go up, the ETF will go up. Basically, kind of just buying a large group of some of those stocks. But the downside of that is that you don't get those big winners. You're not going to see an ETF go up 100% in a year. Most likely you're going to see slower gains than you would if you were investing in one of these high growth companies, such as a Tesla or some more of those speculative stocks that people talk about. And we're going to get into specific stocks in a little bit here. Up next, continued stocks. Now over here to the right is just the highest valued companies in the world. If so many of you guys know these, probably, I bet most of you guys probably haven't heard of Saudi Aramco, but they're not publicly traded in the US stock market, but they're one of the most valuable companies in the world. They're an oil company, obviously. Continuing, there's three types of investors that many people like to classify as either a growth investor, like myself and many college students they're risking a lot of their money, being that you have the ability to take risks now and expect large returns. So these growth companies are the ones that are going to be growing. Generally, growth investors are considered to be companies that grow from 15 to 20% or larger annually. Next, value investing is generally for people that believe that the stock value isn't going to be growing that much, but they're looking for good value in stocks. A stock like Apple is a good value stock. I'm not expecting Apple to double. I'm not expecting them to come out with a brand new iPhone product next year, but I believe that there's good value in Apple. Next is the dividend investors. These people strictly just invest in stocks that give out dividends that are high yields. And many people that are in their retirement will go into these dividend stocks because they pay you basically a monthly income. If you invest in enough money into these stocks, you can start living off them basically. And I know plenty of retired people that do that. It's more passive. It's not as fun because you don't see the massive gains. You're more so going for companies that have stable growth and they're going to pay out the money that they earn to their shareholders. Next is market cap. Market cap or market capitalization is the total value of the company based off what the investors say. So to find the market cap, it's basically the now outstanding number of shares that a company has. You can find it by just looking up how many shares of Apple are there out there and multiplying it by the current share price, and that will give you the total market cap. As you can see, Apple's sitting around over $2 trillion right now. Bitcoin's valuation is basically, if you were to buy every single Bitcoin that's out there, it would cost you $1 trillion right now. Going on, there's like classifications of stocks. If you're in the mega cap, it's over $300 billion. And then large cap stocks are from $10 to $200 billion. Mid caps, $2 to $10 billion. And then the small cap stocks are $300 million to $2 billion. Now that might sound like a lot of money, but for these large corporations, that's pennies on the dollars, the multi-millions of dollars. Continuing with more stocks, earnings. So earnings are some of the things that fluctuate stocks the most. When companies generally announce their earnings every quarter of the year. So 4 times annually, they'll come out and say, this is what we did last quarter. This is what we expect to happen in the next quarter. And going forward, this is what we see happening in the company. And that will fluctuate a stock price rapidly. Most of the time, when the earnings come out, companies jump up or down because they basically give their guidance for the next year of, okay, next year we think we're going to earn these incredible profits. And then investors are like, whoa, I got to get into that stock. They said they're going to grow 80% next year or something like that. And you'll see a large uptick or downtick volume based on whether it's good or bad. Next up is earning investment analysis, as I talked about a little bit about PE ratio. And then the next is EPS growth, which I was talking about in the earnings. So in earnings conference calls, people will come out and say, okay, we expect our earnings per share or EPS to be $1 next year. And the growth on that, so if they say they're gonna have $1 this year, then the next year they come out and say we're gonna have $1.15 to all of our shareholders. That is a 15% growth basically. So those investors are really looking for that growth margin. And next is the PEG ratio. 1 second, I have to pull up my notebook on the PEG ratio, because this isn't a ratio I use personally, but the PEG ratio compares the PE ratio to the growth rate. And so you can find that just by simply dividing the PE ratio. Like say if a stock has a multiplier, it's like a ratio of 10x, and you just divide it by the 15% growth that they talked about, and you'll have a PEG ratio of about 0.67. So most analysts consider a PE under or PEG ratio under 1.0, that stock's a buy, like it's going to go up. And then that means, and then if it's over 2, people believe that you should sell it. You know, there's way too much, you're paying way too much for that stock given the future growth that's going to happen. Taxes. Everyone hates taxes, of course. Live and die by taxes. And if you hold a stock for less than a year, you're going to be paying more taxes on it than you would if you held for longer than a year. Because taxes that are, if you hold a stock for less than a year, it's taxed as ordinary income with your paycheck. If you hold it for more than a year, the rates vary based on the income level that you're in. But generally, it's between 10 and 20% that you're taxed on it, as opposed to if you're in short term and you hold it then less than a year, you're taxed at much higher rates. Now, us as college students, we're in the lowest income bracket, so we're going to be taxed at a much lower rate than we hope to be one day. What to invest in? I'm not going to tell you what you should invest in. I'm going to provide you all the stuff that I know, but honestly, at the end of the day, you should invest in companies that you believe in. Like personally, I saw 2 years ago, I thought, wow, Tesla is such a cool car company. So I invested in it and I've reaped the benefits since, but you have to just see those things. So I knew that electric cars are coming to the market. So a lot of people will jump on that trend. And that's what I mean by when I say trend investing. If you see something that's happening right now, you know, kids are the best way to, I don't know. I've always seen the trends before my parents have, I guess, as far as electric vehicles go, or like social media and stuff like that. We're always more on top of trends than older people are, I guess. So if you see a trend and that a lot of those, like you think that there's gonna be a lot of growth in that sector in the coming years, might be worth investing a little bit of money into it. Blue chip stocks are considered stocks like Apple and larger established company stocks. Those are called blue chip stocks. They're going to be valued at multi-billion-dollar valuations, whereas penny stocks are the ones that are going to be trading under $1. You can buy a bunch of shares of them, and those are the ones that are going to be more volatile. They're not known for being the safest investments. Personally, I've been on the wrong side of investing in penny stocks. So I will tell you it is very risky, but with high risk, there comes high reward. So for some people, that's the avenue they like to take. And then at the end of the day, find an individual you can trust and then learn from them. Don't copy their investing patterns, but learn what they have to say and why they're saying it. Like I mentioned, Kathy Wood earlier is a fund investor that you can buy her ETF called ARK Invest, and basically tracks all of the stocks that she owns. And I think I personally like her because she talks about this next wave of millennial investing and whatnot, of what's the next growth opportunity. So she's high growth, and that's something that I'm interested in. Let's see. Anything else? Like I said earlier, I gave you guys a couple of YouTubers to like, if you wanted to follow along with them. They always have a bunch of good stock picks and they give a breakdown of why they invested in those stocks, etc. Now this is the this next graphic. I got the left hand side. So this, how to invest your first $1,000. I thought $5,000 would be, $5,000 is a lot, but I got this graphic from Business Insider's Instagram, not mine. But these are some great companies that they recommended investing in and why they believe in it. Amazon, it's leading cloud and e-commerce company. Pepsi, it's a solid dividend, like we talked about earlier with dividends. And these are just some companies that they recommend investing in. I'm not going and saying to go invest in them, but this is what they recommend young people to invest in if you want to have some good diversity and some good growth in the future. Paul Mampilli is an investor that I personally follow. I like a lot of his stock picks. And he said for people that are just getting started in the stock market in 2021, these are his 5 picks. These are what he thinks young millennials should be investing in if they want to see some growth. And then finally, I know Reese in the chat earlier was talking about diversifying. And this YouTuber that I mentioned to you guys earlier, his name Solving the Money Problem is his channel's name. He only holds 4 stocks. Now, for many people, 4 stocks is very low, but he likes to play the high risk, high reward game. He believes that these companies are going to be the next big thing, basically. And he doesn't want to put in any of his money in places where he doesn't think there's going to be any growth. Shout out CRISPR. I know a lot of CRISPR was built around Berkeley. So kudos to them. Now they're worth multi-billion dollars. Moving on. So normally I want to have a club speaker. I know I'm cutting it a little close to 2 p.m. here. I'm running out of time, but normally we're going to have a speaker and they'll range, be in some sort of finance background or recruiter or various professionals. If anyone has any suggestions, feel free to reach out to me or put it in the chat, anything. Today, I invited my professor in UGBA 135, Professor Selinger. He teaches personal finance, so I thought it'd be perfect if he came in, but he was busy today. However, he did give me a couple tips to give you guys on investing. So here are his 8 tips on investing, and then a little quote from him up top. I'm not going to be right every time. No one is, so don't expect it. Like I said earlier, no one knows what's going to happen in the stock market. So I can't tell you what to do and like if it's going to be right or wrong, etc. But if you follow these tips that he has, that's when he believes that you will have the highest conviction, basically. So never borrow stocks, only use your own money, or never borrow money to buy stocks. Sorry. Again, only invest in stocks that with money that you won't need for the next 5 years. Do your homework, like I said earlier, about doing your own personal research. If you don't understand investment, don't buy it. Basically, knowing everything about an investment is the goal. If you bought a stock and the reason you bought the stock no longer exists, sell it. If Apple gets out of the iPhone business tomorrow, I'm pretty sure a lot of people are going to be selling that stock because a lot of people believe in Apple strictly for their iPhones or computers. If a stock declines by a certain percentage and you set, like I said earlier, about having rules of entry and exit levels for stocks, if you think that a stock is going to if it declines by a certain percentage and you're not happy with the company anymore, sell it. Focus on percentage loss and gain. If a $900 stock goes from $900 to $1,000, that's roughly like a 10 to 12% gain. But if a stock that's $9 goes to $10, that's that same gain. So you shouldn't focus on the dollar amount that it went up. Oh, a stock went up $100. You should more so focus on the percent gain that happened there. The 9 to 10 and the 900 to 1,000 is the same gain. And then dollar cost average. So for those of you guys that don't know what dollar cost averaging is, it means that it's the best way to time the quote unquote dip and get the best price, basically. So if you invest in a stock, you should set, if you want to dollar cost average, you say, okay, every month I'm going to invest X amount of dollars into X stocks. and I will just buy them at that time so I can get the best price, basically average my cost on the way up as the stock continues to go up. One of the biggest thing that Professor Selinger talks about is diversifying companies, geographies, buy companies from different regions, different industries, different size, different asset classes, buy stocks, bonds, real estate, etc. I really wish he could be here to explain all of this, but he goes into great lengths in his book that I showed you guys earlier. But these are those 8 tips on the last slide were his best thoughts that he could give all of us. 5 stocks in different industries, and then no more than 20% in a single investment. That's just his rule of thumb. You don't have to follow that. Clearly I didn't. This is my current portfolio, and as you can see, it's very Tesla heavy. I didn't follow that rule. You don't need to. It's just his suggestion. And finally, tips of the meeting. So everyone, my tip of the meeting is how to invest, basically. So, and again, time in the market is more important than timing the market. So I don't know if many of you guys follow the stock market, but currently there's a massive dip that's going on right now as people are just worried about the future. So if anyone's interested in getting in the stock market, some people would say now would be a good time. But for those of you, paper trading is an option, basically. So the Investopedia game that I have, I put it out for everyone. Now might be a good time if you want to get in at low prices to go buy those shares and then hopefully win the game at the end of it. You can use brokerages such as Robinhood or TD Ameritrade or Fidelity, Charles Schwab to sign up for the stock market. If anyone else has any questions, feel free to reach out to me. I put my email and my phone number at the end of it. I can give you, I know if friends refer friends, you get referral bonuses. So you guys can go refer each other and you get like a free stock on Robinhood if you refer a friend. Great time. Here we are with the paper trading and the Slack, like I talked about earlier. We're going to have this paper trading game called Investopedia. And in this game, we will be basically buying and selling stocks. Hold on, I'm trying to pull up my profile right now. And are you able to see my Investopedia screen right now? Yeah. Basically, I'm not doing so right now. I'm in 4th in the game. You just go in here, my portfolio. You can see everyone's portfolio of what I bought. A lot of red. I bought way too early. The stock market's going down right now. But the link to join this game, I'm going to drop it in the chat right now. And everyone's welcome to join the game. And there will be a winner at the end of it, gift card or some other sort of prize. So that is the link for the Investopedia game that I just dropped in the chat. And I also wanted to say that here's the link to join the Slack chat. If any of you guys don't want to do Slack and you feel that GroupMe would be a better option, reach out to me. We can do like a group poll or something. Again, I want this club to be centered around you guys. I want you guys to be the ones to tell me where the direction of this club's going to go. So I just put that one in the chat as well. Any questions? So we're wrapping it up here. So if anyone has any questions, feel free to drop in the chat, speak up. I'm opening up the floor to you guys for a second. All right. Feel free to reach out to me. I'm open to talking about investing anytime with anyone. Again, if you want to talk about investing, I'll be in the Slack chat. Feel free to drop anything. I'm going to be dropping like some cool like videos on like, oh, if I see like some trend or something is going up, if you guys want to buy into that stock, or if you guys want me telling you like when I'm buying and what I'm buying, I'm more than willing to drop that in the chat as well. Again, don't just buy it just because I bought it. Do your own research. Here's my information. Yep. And then that's it for today, guys. Thank you so much for coming out and supporting. I really appreciate all of you. I will be sending out messages about when the next meeting will be. Again, for all of the people that are interested in joining the executive board or being team members, please feel free again to reach out to me. Here's my contact information, or by filling out the form that I sent out in the email, which I will drop in the chat if anyone is interested in joining the executive board. Please just go ahead and fill out this form, or just email me. I don't require you guys to have a resume. It's just help me know your background a little bit better and what you're well versed in. So if you don't have a resume, you don't need to fill that part out. I just want to get to know you guys, and I'll be conducting interviews in the next coming weeks. And hopefully, maybe by our next meeting, or maybe by our third meeting, we'll have a whole executive board and team representative built out. Follow our social medias. They're right down here. Let's see, what else? I want to make sure I don't miss anything. I'm going to be uploading this video most likely on YouTube. It'll be private, so no one else can see it besides us. And if you guys enjoyed today, I hope I can get this to be a little bit more fluid, and next time, feel free to tell your friends, teammates, whatnot. You don't have to be a club member to come to the meetings. I want all student athletes to come learn about this stuff. I'm not going to require any sort of time commitment out of anyone. You don't have to come to all the meetings if you want to be a member. Just show up from time to time. I appreciate anyone's input, feedback. Yeah, and I hope that we can all learn together through myself, speakers, etc., and have a better financial future, you know? Yeah, so that's it for today, guys. Thank you so much for coming. And again, the link to sign up for our club is right there, and it's also on our social media. I'm going to be dropping that link in the chat if anyone else is interested. This is the link now to sign up for the club. The prior one is for the executive board, and it states it very clearly in case you click on the wrong one. Yeah, thank you guys all so much for coming. That's going to conclude our first meeting. I will be sticking around if anyone else wants to talk to me or chat after. But yeah, thank you guys all so much for coming out. I really enjoyed it. Yeah, go Bears.